that's a responsibility and a half of if you were long, you were wrong, weren't you, Greg? And were you long?
Yes, I was, because I'm a long-only manager. But one of the things I do, Rishaad, is have stops, and as the markets start to decline, I start to reduce exposure. And indeed, our exposure to commodities is around 20%. The balance is in cash. Not dissimilar to a lot of guys out there, I should imagine. And as Mia was pointing out earlier, there's been a lot of risk off in the last couple of months in this commodity space. I'm still bullish. Agricultural always have to be in...
We just have a look at population growth, don't you?
That's it, that's it. And if you're wrong, you have your stop, and if it drops down, hits your stop, well, you step to one side. If it goes down lower, well, psychologically, you always feel better buying lower. But the contagion is very serious at the moment.
It really, I mean, let's take copper, for instance.
Sure.
That's had a serious knockdown, hasn't it?
Yes, it has, it has. And the Chinese...
the Chinese story is intact for the time being, but the noise, the mood music is changing a little bit. What do you think?
Yeah, well, I agree with you. And you're a brave man to be buying any of this at the moment. There's this contagion right across the class. And we haven't seen this. I think it's probably worse than what it was the crisis before. And, you know, cash is king, whether it's in commodities, whether it's in equities, probably even property, you know. You're a brave man to be buying anything just at this stage, right?
So if you look at what's going on, do you think that this is the end of the super cycle, or is it just some sort of gut check as people take stock of what's going on and decide to see how it all plays through, and then perhaps it reconvenes? Yeah,
I think it'll probably reconvene at some point. As I've always said to you, mate, the big issue particularly with the ags is the weather pattern. And so we've seen these weather patterns. We've got a 4-3 typhoon warning here now. You know, it's supposed to be the end of typhoon season. So from a weather perspective, I like the ags, but the base metals, crude oil. But see, the other interesting thing too with crude oil, apparently once it dropped below $80 a barrel, a lot of the Gulf states are actually impacting on their budgets.
Yeah.
And so,
especially Saudi Arabia.
Yeah, exactly. Yeah. So there could be a scenario there where they start saying, well, we're going to have to start cutting back the supply that we were using to offset Libya and try to lift these prices again. Well,
great. Thanks for sticking around with us. Let's talk a little bit about some of these agricultural commodities. You're bullish on some of them in the long term, given weather patterns and also demographics. So what do you like the most?
Corn, because it's not only consumed by us, it's consumed by cattle, and it's also converted to ethanol. And then the second one is sugar for the same reason. If we don't consume it, it's converted to ethanol. And so from an energy food perspective, they're the two I like. Also, we were talking between the break rice. I think rice is one that we've got to watch. We've
got the Thai new government there trying to raise prices for farmers, and that's going to raise prices across the board, wouldn't it?
Yes, it is. It is. And they're a major supplier, along with Vietnam, to the rest of the Southeast Asian region. And I was thinking on the cab in here today, probably a good thing about these prices coming off, Rishaad, is that there's less of an inflationary concern for the government. So from one side of the coin, they're really quite happy that the price has been dropping. They don't have that. But then again, you've got your producers and your manufacturers saying, well, you know, our profit margins have been reducing. They've been contracting over the last couple of months. At what point are these guys going to step in and say, well, the profit margins aren't there. We're going to hold back and store it. So that's going to be the next thing. And that's going to increase the volatility even more.
You know, the investor Jim Rogers, I mean, I've had him sitting there a few times. You know, he always says, if you want to be driving a Ferrari in a few years, become a farmer. That's what he always says.
Well, the problem with farming is that you're dependent upon the weather, you're dependent upon labour, you're depending upon the amount of fertiliser you use. I much prefer, from an investor's perspective, to actually let the farmer take all the risk and then go in and buy the futures contract, and then you've got what's sitting in the silo. But I think there's probably better places to be than a farmer at the moment. You talk to any farmer, they tell you how hard it is.
But have you ever met a farmer who hasn't told you how hard it is?
No, I haven't. Exactly. Exactly.
Let's also talk about gold and silver a little bit as well. I mean, gold last week and the week before, we've seen this big pullback from the near $1,900 the ounce level, trading above 16. Still, we were below that. Now, it does seem that as we saw that equity sell-off, not last week, the previous week, that it was also on the way down. You would have thought people had gone into it as a haven play. So what's going on here? I mean, because if there's volatility in the gold price, we've got to be worried, haven't we?
Definitely. We do have to be worried, because when you see a market like gold behaving like it shouldn't, that's another heads up that we are in extraordinary times and that a lot of the rules are being rewritten again, and that it should be a safe haven, but it's still dropping off. As we were saying between the break, I still think cash is king. While ever you've got this uncertainty across the spectrum between US, Euro, potential decline in growth, the capital will be moving into the US dollar at this stage. I think long-term gold is still a pretty good investment play. I know you're not that comfortable with it, but silver is probably even better.
But I mean, silver, again, we saw what happened with the margin calls on that, and how it took an absolute kick in,
Yes.
and then we're back up above 30. Would you be a buyer at 30?
Oh yeah, I'd be a buyer at 30, but I'm glad you mentioned that. I think that's been a quasi-easing as well. I think there's been a lot of pressure on the exchanges by the governments to increase the margin, which is effectively deleveraging. So I think that has been a concerted effort on gold, silver, and indeed right across the commodity space.
A lot of talk that hedge funds have been also just getting out of the net shorts on this as well lately.
Yeah. Well, they've actually had to take capital and put it elsewhere to cover the cost of their losses in their equities. And so I think one of the reasons why gold sold off is because if you look at the book, it probably would have been the only market that they were profitable, and psychologically it was comfortable to take profit on something that actually was in profit. And so I think that's one of the reasons why they sold down. But watch the margins. I think they're going to become very sensitive to that. And we could see in the futures, for example, 100% margin relative to the face value. It's happened before. Nothing says it can't happen again. And it's part of this trying to get risk off their books, and the government getting them to deleverage, part of this Dodd-Frank, you know, it's along with what's happening in Europe and the US.